Did you know that the economy is the #1 election issue? Even with recent economic uncertainty, U.S. investors and business owners are heading into the presidential election feeling more optimistic than they did 4 years ago. We found this out and much more in our latest Investor Watch survey. We spoke to over 900 investors and 500 business owners in the U.S. We'll be sharing what we learned right now on UBS Trending. Welcome to UBS Trending. I'm Bill Carroll, UBS Head of Sales and Development for Wealth Management US, and I'm excited to have two experts here in the studio with me today. Nadia Lovell, Senior Equity Strategist from our UBS Chief Investment Office, and Shane Lieberman, Senior Advisor in our Government Affairs team. He's down in Washington, D.C., joining us remotely. Welcome. Thanks to both of you for joining us today, and we're going to get right into it. You both know UBS recently surveyed investors and business owners to better understand how they're feeling ahead of the presidential election in November. Of the hundreds of investors we surveyed, interesting stats, 84% state that the economy is the #1 election issue. 55% are highly optimistic about the U.S. economy, compared to just 43% 4 years ago. Yet, voters are just about evenly split on which candidate can better handle the economy going forward. So Shane, I'm going to start with you, and thanks for joining us remotely from Washington. Why do you think we're so divided on this economic issue?
Well, thanks, Bill. I think the first point I would make is that, we're divided as an electorate right now. Look back to 2016, while the race for the White House was divided by a few million votes, the three states that decided the election, there was only 146,000 votes between those three states. So a very close election, similar in 2020. So fast forward to today, you still have that divided electorate. And when it comes to the economy, it's somewhat of a Rorschach test where people see what they want to see. And, backing a candidate is often takes on that Rorschach test and they see what they want to see. I think inflation obviously plays into this. And I think, that anxiety that inflation has brought the past few years has divided the country and played down some ideological lines as well.
Shane, that's great perspective. I want to get your thoughts on something else. We also discovered in this survey that 55% of business owners actually think Trump is better equipped to address the economy versus only 45% for Harris. Now, that said, what specific economic policies do you think most voters are concerned about?
Well, I think inflation would be number one. And I think that's why Harris is doing better than Biden was, because inflation is starting coming down a little bit. Also, she's been able to distance herself from Biden on some of these economic policies, and separate herself just enough to move the needle when it comes to who's going to support her. But I think, most of us recognize that there's likely to be a large tax bill in play next year. And so some of her policies on increasing the corporate rate, increasing the tax on cap gains, has brought some, concern from certain sectors of investors and business owners. So, while on the flip side, you have Trump, who has been very aggressive with tariffs in his first term, and if he's reelected, would probably be more aggressive. And I think that has brought about some anxieties as well.
Interesting to see how that one plays out. So Nadia, thanks for being here in the studio today in New York. Great to see you again. We also identified that 78% of investors want to better understand the impact of the election on obviously their portfolios. Another 77% are looking to make changes before the election. So from the CIO perspective, how should investors approach, we'll say first, the political uncertainty, and what factors do you think they're considering leading up to the election?
Thanks, Bill. Absolutely. The election does add some uncertainty, but we continue to advise investors not to make any major asset allocation changes on the account of the looming election. We all have to bear in mind that campaign trail promises don't always actually turn into policy. A lot is going to depend on the composition of Congress. But for investors that might be concerned or have exposure to companies that could be more sensitive to the election outcome, we do advise them to put hedges in place, strategies that can help mitigate any sort of downside risk or potential pickup in volatility. And I'll give a couple of examples. For example, in a red sweep sort of scenario, we could see some of the renewable stocks come under pressure on concerns that there could be curtailment of some of the government credit and incentives that were put into place under Democrats. We also could see consumer discretionary stocks. Some of these stocks could sell off on concerns that we could see a universal trade tariffs. In a Democratic sweep, the broad market could also be concerned about the potential for a higher corporate tax rate and what that will ultimately do to corporate profits. So, Bill, we're going to keep our ears perked during the campaign seasons for any additional rhetoric around trade tariffs as well as corporate taxes.
Excellent comments. At the beginning of it, you actually suggested that politicians don't always do exactly what they promised when they're elected. My gosh, that's stunning news to me. Thank you. Always stay with you for a second. 66% of business owners stated they are highly concerned about increases in business taxes, as you mentioned. Now, that makes them worry about a potential recession. And one of the biggest takeaways, again, from our survey is that 77% of investors said having expert financial guidance is really important in an election year in particular. 92% believe that a financial plan will help them through election-related market volatility. So, long way of getting to, tell us, how should investors be preparing for potential changes in fiscal policy? We'll talk about economic conditions, and how should they approach their entire portfolio as we get closer to that November date?
Those are great questions. And of course, the potential for higher corporate taxes under a Democratic sweep is something to keep a close eye on. Now, in terms of recession, there's been a debate in the marketplace for quite some time on whether we're on course for soft landing or hard landing, that is a recession. And that has less to do with the election and more to do with monetary policy. The question remains, has the Fed kept interest rate too high for too long? In CIO, we believe that the economy is on course for that soft landing. We do expect the economy to slow down from the brisk pace that we saw last year, but we don't think that a recession is on the horizon. Now, the Fed has started its cutting cycle finally in September with 50 basis points coming out of the gate. It remains to be seen the course and the path for monetary policy over the next year. But we do think that the resiliency that we continue to see in the American consumer, couple that with now borrowing costs that's actually going down and financial conditions that's easing, that's going to help sustain economic growth. But bear in mind, interest rates are now coming down, so cash yields will also come down with that. So for investors that might have some excess cash, we really encourage putting that to work in the market through quality bonds as well as equity income sort of strategies, including quality stocks. Bill, we always talk about the importance of a diversified portfolio, and that is still the case here. We know that we want a portfolio that's going to be able to weather the different sort of environment, and we think that a quality portfolio tends to do pretty decently across different parts of the economic cycle as well as the political cycle. And a part of that diversification as well, gold is a part of that. Gold can act as a good hedge in that sort of environment as well.
What a great example of the superb intellectual capital and advice available from you and your colleagues in our CIO office. Thank you so much for that. So Shane, I'm going to go back to you. We were talking about both candidates, their proposed policies. And in my opinion, neither's done a great job of really explaining them in detail so far. But which are better aligned with the current economic challenges, such as inflation or the need for job growth?
Yeah, great question, Bill. And I think there is, you're correct to point out that neither has done a great job of explaining. And I think that's led to some frustration from a lot of lawmakers I talk to. And, I think we get caught up in the headlines. But when it comes down to it, you do see them touching upon issues like housing. Part of Vice President Harris's proposal that increases the tax on cap gains. That's in order to pay for housing proposals, where I think there's a lot of frustration among voters about how high housing has gone up and how it impacts their ability to live the American dream. I think over the course of time, though, it's really hard for lawmakers to make an immediate impact on inflation. So a lot of their proposals take time, and that is also something hard to communicate with voters. And so, that leaves them in a position of, just quibbing, are you better off than you were 4 years ago? And that sometimes is all we get out of them. Overall, I think both plans will have some pluses and minuses for the economy. And, you have to figure out how does this all going to work out with Congress, though. They, are going to be dependent on what bills Congress sends their way often. And that is going to be some of the calculation that we need to think about the true impact on the economy for the policies they're proposing.
Shane, thanks for that perspective. I think you and your colleagues in the Office of Public Policy down there in DC, your ears are close to the track, always giving our clients and our advisors terrific perspective. And we're looking forward to the next conversation. This is a great place to leave this one. I want to thank Nadia for being here in the studio with us. Shane, down in Washington, thanks for your time. Your political and macro views on the investors and business owners survey is so helpful to us. Now, for more insight, please read the detailed Investor Watch surveys at ubs.com/investor-mindset. It's on your screen. You don't have to remember that. Also follow UBS Trending on Instagram at UBS Trending. And as always, if you have any questions about your portfolio or anything we've discussed today, please speak with your financial advisor. Thank you so much for watching today. If you're a UBS client, we appreciate the trust and confidence you place in your advisor. And if you're not yet a UBS client, well, we look forward to introducing you to one of our outstanding advisors. From New York, I'm Bill Carroll. Have a great day, everyone, and remember to keep your eyes on what's trending.